Thanks for coming on. Did you see this coming, 7.74%?
Yeah, it looked a bit sharper drop.
Yes.
Our expectations were actually between 8 and 9. We didn't expect such a sharp drop over 250 bips.
The headline figures that the cost of living is coming down, but what are the small things contributing to this?
Yes, cost of living is coming down, but 2 or 3 things have made this sharp drop in year-on inflation. One has been there's been a perceived increase in food supply coming off from a very successful rain season, and then 2 major costs feeding into inflation have come down greatly. Fuel costs, especially at pump level, had a drop over 10% in the middle of the year, middle of the month.
Yes.
And then also electricity costs have also come off mainly because of the emergency thermal substitution to hydro. So that has again filtered in through the inflation numbers, and then we also noticed some reduction in aggregate demand given the tight monetary policy the central bank has been pursuing, and also slightly input from mobile telephony because of 30% reduction in mobile termination rates.
I'll jump into all those specifically in just a moment, but in all fairness, the central bank's target used to be 5%. They sort of just jacked it up a few months ago.
Yeah, for a long time, 5% was the target. Why? Because we had experienced a low interest rate environment, but things snapped up.
Yes.
From middle of last year, rates rising up, short-term rates rising up to a high of 20%. So that informed their revision of target inflation to 9%. Whether they'll revise it further to 5% is yet to be seen. But I think the bigger thing is for them to have the new low inflation environment being felt by the normal person on the streets.
Is that now evidence for further rate cuts in September when the MPC meets again?
Yes, of course. Such a sharp drop in inflation hints to a large extent some loosening to the monetary policy. We are sitting at 16.5 on the CBR.
Right.
We think they need to do something on that as they meet in coming week, and more so because there's a need to expand. To encourage credit expansion. And the signaling effect should come from a reduction in the CBR rate, although commercial banks have shown strong signs and actual signs of reducing their base lending rates.
But that committee will only be convinced if once again in August inflation keeps coming down. Do you think it will?
I think all the 5 factors we've just mentioned will consistently come off to a larger extent to the full 3rd quarter of the year. So September, October, November, the 3 factors will come into play. The only thing which might slightly destabilize inflation is if the monetary policy is let loose a lot.
Yes.
That can turn around things. And then if the 2 major costs, which is electricity and fuel, turn around. But still, the high base effect of last year is still contributing to a declining inflation number.
But then there's a risk. The VAT bill that is supposed to come before the House of Parliament, it suggests that VAT should be introduced, 16% VAT on basic foodstuffs and also on things like other major components that people use.
Yes, you're very right. The VAT bill as currently structured puts pressure on prices of basic commodities, as you mentioned. And that will filter into the inflation number. But to a larger extent, an extreme change of the tax regime has an impact to the country's political environment.
Right.
We've had leaders who already started speaking against that bill. It will come one day,
right,
but maybe we'll not see it in the 3rd or 4th quarter of this year.
Because the concern among some members of Parliament is that this is being forced down on us by the World Bank and the IMF.
Yes.
Yes,
that's the assumption. But to a large extent, the Revenue Authority has been working on this for a long time.
Yes.
And I think some of the items which have been off the VAT bracket have always been in the radar of the Revenue Authority. And as much as there might be outside forces on the VAT bill, to a large extent, the Revenue Authority has been hinting on this for quite a while.
Is there any cause for concern on the fuel and electricity cost side? The fuel, crude costs internationally have come off quite significantly.
There isn't heavy pressure on international crude prices because demand remains subdued.
Yes.
Supply is the only worry, especially when it is distorted. But the forces of demand outweigh the forces of supply. So the prices will remain subdued for a while, and that should filter through in local pump prices. So there is no more danger on fuel prices. On electricity prices, I think they continue to come off because we've just come off from a successful long rain season. We will be heading into a short rain season beginning of October, implying that hydro will remain a bigger contribution of the power of the country. So the emergency expensive thermal, which comes from fuel, will not be a major pool of power, by extension raising the cost of electricity up. So we are looking at a third quarter of 2012, which will experience a continued low inflationary environment.
Okay, asante sana. We'll leave it there, Anthony.
Thanks.
Anthony Mwithiga, Chief Investment Officer at Stanbic Investments.